Hello, this is Business Now, reaching you live from iBrandTV News Studio in Lagos, Nigeria. Coming up, World Bank predicts Nigeria may have one of the highest inflation rates globally in 2022. And President Buhari expresses strong reservations on worrisome changes made by the National Assembly to the budget. And President of El Salvador, popularly known as Bitcoin President, gives 5 predictions for Bitcoin in the year 2022. And U.S. stock futures rise as Wall Street looks to start of 2022 on solid footing. Glad to have you join us now. I am Frank Omalape. Now, the World Bank says Nigeria may have one of the highest inflation rates globally in 2022, with increasing prices diminishing the welfare of Nigerian households. According to the World Bank, Nigeria is projected to have one of the highest inflation rates globally and the 7th highest among sub-Saharan African countries in 2022. The bank said this in November edition of Nigeria Development Update. According to the global financial institution, high inflation hampers the country's attempt to achieve economic recovery and eroding purchasing power of most vulnerable households. The World Bank further states high inflation is frustrating Nigeria's economic recovery and eroding purchasing power of vulnerable households. In the absence of measures to contain inflation, rising prices will continue to diminish the welfare of Nigerian households. Away from there now, members of the National Assembly have insisted on the amendment made to the 2022 appropriation bill, including the reduction of allocation to 10,733 projects and insertion of about 6,000 new ones. The lawmakers stated that by the power of appropriation conferred on the National Assembly by the Constitution, the Parliament has the right to tinker with the federal government's budget like any other bill. According to the members, the changes made and the response by the President Mohammed Buhari show that the legislature was not a rubber stamp of the executive as alleged by Nigerians. Buhari had on Friday, while signing into law the 2022 appropriation bill and the 2021 finance bill, expressed strong reservations on the worrisome changes made by the National Assembly to the federal government's budget. The president declared that he would revert to the National Assembly with a request for amendment after the parliament's resumption so that critical ongoing project cardinal to his regime will not suffer a setback due to reduced funding. Still on the 2022 budget, an economic analyst has provided insight into what Nigerians should expect from the budget as appropriated and approved by President Muhammadu Buhari's administration. Dr. Yusuf, the Chief Executive Officer Center for the Promotion of Private Enterprise, will appear as a guest analyst on iBrand Business Breakfast, shared his thought.
The President, both the President and the National Assembly, have been able to retain or maintain the January to December cycle. I think that is something to be commended because it is good for planning. It is good also for budget implementation to be able to keep, have the discipline to keep to that timetable. It's something that is, I think we should commend both the President and the National Assembly for. Okay. But the complaints by the President before his ascent, I think is something we need to worry about. You know, he expressed some very strong reservations about what the National Assembly included in the budget, how they removed some items from one budget head to the other, how the budget was entirely distorted and so on. And those reservations were far-reaching. And I thought that if the President had such very fundamental reservations, why did he have to even sign the budget? I mean, assent to it. Because having assented to it, I mean, it's now an act of the National Assembly, it's now law. And it's now binding on everybody, unless they're able to go back and rework it. And I'm sure the National Assembly may begin to kick that they don't want to be pushed around. I mean, we're likely to see that kind of scenario play out. when they resume from their break. But generally, I think it's a good thing, but I think there should be a lot more engagement between the National Assembly and the Executive so that we don't have this kind of back and forth complaints and all of that about what should be in the budget, what should not be in the budget. All those things, I think by now we should have gone beyond that. Having been in this democracy now for over 20 years. The revenue expectations look to me to be ambitious. And I think that we ought to have learned even from our experience in the past budget. Hardly were we able to make up to even 70% of our revenue targets, even at the best of times. So some of these assumptions regarding revenue, dependent revenue especially, and the rest. And just as the president said, it was part of the reservations even of the president, that some of those revenue expectations may not be realized. So therefore, at the end of the day, we may be seeing a deficit that is much more than this.
Similarly, Mother Yusuf also allayed fears of the subsidy removal in 2022. Yusuf said the government may not be able to manage the impact the removal will have on the economy in a pre-election year.
On the fuel subsidy thing, it is not likely that it will happen. First, because of the pushback by Labour. Second, because of the political costs of removing subsidy in a pre-election year. I'm sure the ruling party and the party strategists within the APC are likely to kick against the removal of subsidy, even though it's already in the Petroleum Industry Act. From a political exigency point of view, I don't think it will happen. But let me say that for the medium to long term, we need to remove the subsidy.
Okay.
If you want this economy to be sustainable, and if you want this economy to have some very good balance, we cannot continue to spend close to 2 trillion on subsidizing PMS. It's just PMS, so we are not talking of this. We are not talking of aviation fuel. We are not talking of gas. Just PMS. It is not sustainable. But again, we have to choose our timing. We have to choose the strategy. We have to look at what is happening to domestic refining. We have to put all of those things on board for us to be able to determine how and when to remove that subsidy.
And away from there now, the Central Bank of Nigeria says the banking sector will increase access to loans for Nigerian households and businesses in 2022. This was disclosed by Governor of the Central Bank of Nigeria, Godwin Emefiele, in a statement. He stressed the need for all stakeholders to work to build a more resilient economy that will be better able to contain external shocks while supporting growth and wealth creation in key sectors of the economy. And now, a member of the Monetary Policy Committee of the Central Bank of Nigeria, Adamu Lamatek, says the federal government should continue to focus on the country's economic growth as it remains fragile. Lamatek, who is also a CBN deputy governor, disclosed this in his personal statement at the last MPC meeting, pointing out that the various sectors of the economy were still struggling despite the positive growth in gross domestic product in the third quarter of 2021. The National Bureau of Statistics had in October 2021 disclosed that the country's GDP grew by 4.03% in third quarter. Lamatek also said the economy needed to expand at a higher rate than the growth recorded in the third quarter last year to generate more jobs for economic expansion. He advocated for extra fiscal support to enable those struggling sectors to recover. And now, the president of El Salvador, Nayib Bukele, popularly known as the Bitcoin president, gave 5 predictions for Bitcoin in the year 2022. One of his term predictions includes the price of Bitcoin trading at $100,000 per coin. The president also predicted that 2 more countries will join El Salvador to adopt Bitcoin as a legal tender in the year. Last year, El Salvador became the first country to adopt Bitcoin as legal tender under Bukele's presidency in an attempt to combat high inflation in the country. Since Bitcoin became a legal tender, the nation has acquired a total of 1.3 Bitcoin to its reserve, buying the dip whenever there has been a major price correction in the flagship asset and reinvestment its own realized gains into new infrastructure projects, including a hospital and a school. Away from there now, the Association of Bureau de Change Operators of Nigeria, ABCON, has urged the CBN to reconsider the ban to allow BDC operators to receive diaspora remittances in the new year. This was disclosed in a statement released at the weekend signed by ABCON President Dr. Aminu Gwadabe. According to Gwadabe, the BDC industry's yearly transaction volume of over 1 trillion naira is in jeopardy, while enormous capital investment in the sector is becoming obsolete, eroding and winding down. Gwadabe suggested that just as the CBN de-risk the agricultural sector, making it easier for farmers to get single-digit loans from banks, the CBN would also de-risk the BDC's operations, allowing them to receive diaspora remittances through international money supply operators and deepen foreign capital flows to the economy. A prominent entrepreneur has advised unemployed youth not to keep waiting for government to provide them jobs, but rather think of ways of creating employment opportunities. Ahmed Sofi, Chairman and Chief Executive Officer of Fire Investment Limited, made this submission while sharing his experience with iBrandTV.
I think this mentality of going to school for only to get a job, maybe in the federal level or at the state level, has to change. We should know that the federal government or the state government cannot really give all Nigerians a job. So you need to, whatever you learned in school, you need to put it in practical. That means you don't have to wait for government to give you a job. You can be the one who is given job. As I told you now, I have hundreds of people that I employed myself, and in which I'm sure if you can do the same thing I have done, you will also achieve it. It's just the same thing. Be punctual, hardworking, and you will achieve your dreams. There must be some people that you learn from. As I told you, I learned the hard way. And from what I have learned is the same path. If you follow the path I follow, I expect you to be successful. I expect you to achieve the same thing I have achieved. So I think it's the same path, it's the same road. If you just have to follow it, I think you will also be successful. Of course, I have seen it from different people. I have learned from their mistakes, and I have avoided those mistakes. So you can also do it.
You've been watching Business Now, coming to you live from iBrand News Studio here in Lagos. Still to come, U.S. cuts off Ethiopia, Mali, Guinea from Africa duty-free trade program. We'll bring you details and more business update after this commercial break. Please stay with us.
Most people don't understand the magic of a perfect skin, the allure of a well-pampered skin. We bounce from skincare products to skincare products, from spa to spa. Looking for that ideal solution. I found the solution. And it's Blemiville Skincare and Spa. My name is Neil, and I'm proud to be a part of the Blemivy family.
Glad to have you join us again. This is Business Now, coming to you live from iBrand News Studio. Let's flip over now. South Africa's rand sleeping early trade on Monday as a surge in COVID-19 infections globally due to the Omicron variant dampened risk appetite. Earlier in the day, the rand traded at 15.9 against the dollar, of 0.14% weaker than its previous close. While South Africa has said it believed it had passed the peak of a wave of coronavirus infections caused by the highly contagious Omicron variant, the surge of infections in other countries remain a concern for investors. Investors' focus at the start of the new year was also on how the U.S. Federal Reserve plans to taper monetary stimulus, especially in light of the spreading Omicron variant. Away from there now, the United States on Saturday cut Ethiopia, Mali and Guinea from access to a duty-free trade program following through on President Joe Biden's threat to do so over alleged human rights violations and recent coups. The U.S. Trade Representative's Office said in a statement that the development was due to actions taken by each of the governments in violation of the AGOA Statute. Biden said in November that Ethiopia will be cut off from the duty-free trading regime provided under the U.S. African Growth and Opportunity Act due to alleged human rights violations in the Tigray region, while Mali and Guinea were targeted due to recent coups. The AGOA trade legislations provide sub-Saharan African nations with duty-free access to the United States if they meet certain eligibility requirements, such as eliminating barriers to U.S. trade and investment and making progress toward political pluralism. And on the foreign scene now, Turkey's annual inflation jumped far more than expected to 36.08% year-on-year in December, the highest since September 2002. Data showed on Monday, reflecting a plummet in value of the lira late last year. Month-on-month, consumer prices rose 13.58%, the Turkish Statistical Institute said, compared to a Reuters poll forecast of 9%. The annual inflation forecast was 30.6%. The lira was trading at 13.6 against the dollar after the data, 3% weaker on the day, but off an early low of 13.92%. It shed 44% of its value last year after a volatile November and December. The producer price index rose 19.08% month-on-month in December for an annual rise of 79.89%. The data showed reflecting soaring import prices due to the currency crash. And now U.S. stock futures rose early Monday morning as Wall Street looked to start of 2022 on solid footing. Futures ties to Dow Jones Industrial Average rose 104 points, or about 0.3%. Those for the S&P 500 advanced 0.32%, and Nasdaq 100 gained about 0.4%. The move in futures comes after markets close out a strong 2021 last week. Meanwhile, the S&P 500 rose early 27% for the year, with the Nasdaq Composite Index and Dow Jones also posting large returns. Stocks fell slightly on Friday, but the S&P 500 and Dow were positive for the final week of the year. The new year starts with continued uncertainty around the COVID-19 pandemic. The rise of the Omicron variant helped lead to thousands of flight cancellations during the holiday season, and has led some business and schools to consider temporary closures. Several major Wall Street banks have asked employees to work from home for the first few weeks of January. You're watching Business Now. Up next is Entertainment Business.
Hello and welcome to Entertainment Business News. I am Michelle Abanum. Another weekend, another chance for Sony superhero adventure Spider-Man No Way Home to flex its box office dominance. The comic book sequel starring Tom Holland as Marvel's favorite neighborhood web slinger towered over domestic box office charts for the third weekend in a row. No Way Home captured $52.7 million over the New Year's holiday frame, boosting its domestic tally to $609 million. It extends an epic streak for the latest Spidey adventure, which continues to deliver the kind of ticket sales it would have been expected to make in pre-pandemic times. No other blockbuster has been able to come close to reaching similar box office heights, at least in the US and Canada. Moving on, Nigerian music star Davido has revealed that he smiled to the bank all through 2021. The singer made this known in a post shared via his Instagram stories on Friday, December 31st, 2021. Davido is unarguably one of the highest-earning celebrities in the country. From record sales, streaming, and even mouth-watering endorsement deals, the music star sure had a fantastic 2021. In December, he landed a major endorsement deal with sports company Puma. Even though the exact figures of the deal weren't stated, reports revealed that the singer endorsement ran into millions of dollars. And that's it on Entertainment Business News. I am Michelle Abanum.
Thank you, Michelle. Coming up now, it's sport business.
On sports business at this hour, the historic Discovery and Warner Media mega merger will be able to proceed as structured after it received approval from the IRS. The $43 billion deal will bring together Warner Media's Turner Sports, TNT, TBS, CNN, Warner Bros., HBO, and Discovery's Eurosport, Food Network, HGTV, and others. Discovery also has the rights to the Olympics across Europe through 2024 in a 6-year, $1.5 billion deal, and is reportedly in talks to form a joint venture with BT Sport, which holds UK Premier League rights. Warner Media owner AT&T revealed that the deal received a favorable rating from the IRS as a reverse Morris trust, a transaction type designed to be tax-free for shareholders. Under a reverse Morris trust, AT&T will first spin off Warner Media before merging it with Discovery. To remain tax-exempt, AT&T shareholders must retain a majority stake in the company. As currently structured, they will receive 71% of the new company's shares and be able to name 7 of 13 board members. Discovery CEO David Zaslav and CFO Gunnar Wenderfels will run the new company. If completed, the combined entity will be worth around $130 billion and hold broadcast rights to the NBA, the NHL, and the Olympics. And still talking sports business in the world of football, the Premier League's new regulations will require clubs to submit any sponsorship deal worth more than $1.3 million to the league to determine if it's an associate party transaction. If the league suspects that a deal is involved with an associate party, it's defined as having material influence over the club or entity in the same group of companies as the club. Then an independent firm will decide if the deal is of fair market value. Clubs will be required to submit their sponsorship deals dating back to 2016 by January 11th. Manchester City and Newcastle United both voiced their opposition to the new regulations. The league's decision followed Saudi Arabia's Public Investment Fund's $409 million for an 80% stake in Newcastle United. In an emergency meeting in October, clubs voted to block Newcastle from other lucrative deals, and a temporary amendment was passed that month banning other related party transactions. In November, Premier League chairman Gary Hoffman announced he would resign in January, partially due to ongoing scrutiny. And still talking the Premier League, Chelsea have reported its full-year earnings, recording a post-tax loss of $196.4 million for the fiscal year ending June 30th, 2021. The year prior, Chelsea posted $49 million in profits, and the club attributes the loss to matches taking place behind closed doors, as well as decreased profits on player sales and increased player amortization. Matchday income fell $62 million to $9.7 million. Chelsea isn't the only European super club that reported losses during the same period. Juventus lost $246.6 million, with revenue declining 16% year-over-year to $565 million, while Manchester United posted $126 million in losses for the year. Chelsea's broadcasting revenue grew from $246 million to $369 million thanks to the delayed 2019-2020 season and the club's success in the UEFA Champions League. And that's it on Sports Business. I'm Samson Oleide.
Thank you, Samson. And definitely that's all we have time for Business Now. Many thanks for watching. I am Franco Manape. Bye-bye for now.